Average mortgage rates have been absolutely all over the place over the past 1 week. So for example, 1 week ago, we basically had a 6-month low in rates. But as of today, which is on Friday, April 11th, our rates did increase to about a 2-month high, an increase of about a half a point in one single week. There's a lot of changes happening right now with the U.S. housing market. So we're going to talk about home prices, housing inventory, sales, and much, much more according to a new report posted from Redfin today. And of course, please consider subscribing if you haven't done so already. I post frequent housing market updates so you guys can be more informed. With that said, let's begin today's video. It says pending home sales and applications for people who want to apply for mortgages improved a bit at the start of April before all these things took place regarding tariffs. But since then, the back and forth of President Trump's new tariff policy, rising rates, and the increased odds of a recession have likely pushed down home buying sentiment. Also, overall consumer sentiment on a national level has dropped greatly as well. And of course, you guys all know buying a house is a very emotional one. If you're not confident about the housing market, the economy, then things might change. It says the housing market is under pressure as prospective home buyers and sellers navigate a rapidly shifting economic landscape. With President Trump's tariff policy, a volatile stock market. I haven't seen anything like that. One day, the stock market tanked 5%. The next day, it rose by 2%. But overall, the stock market has been going down this year, especially over the past week. Also, we have that and increased chances of a recession, exacerbating widespread financial uncertainty. So we'll get to the numbers here. They talk about how application numbers rose by 9% from last week. They did increase compared to 1 year ago as well. And pending home sales, a measure of home buyers getting their offers accepted, posted its smallest decrease since the end of 2025. So on a year-over-year basis, we're still down, but that difference is actually a little bit more narrow compared to weeks past. So this improvement in demand is unlikely to last very long. Mortgage rates have since soared, jumping on April 9th to 6.95%, their highest level in 6 weeks. This is kind of old news because this is based on Freddie Mac's weekly survey that was conducted last week. So let's actually look at rates as of Friday, which again is today. This is the Mortgage News Daily. You guys all know I'm a licensed realtor here in Sacramento, but I'm also a licensed loan officer in California and also in Texas as well. These are not my rates. This is just the rates according to them based on their survey. They basically survey lenders across the country and ask them, hey, if someone's looking to buy their house they want to live in, their primary residence, they're putting 25% down, they have excellent credit, what is your best rate today? So based on their survey, the average 30-year fixed rate is at 7.10%. Jumbo is at 7.2. Jumbo means high balance loans, by the way. FHA and VA is around 6.52% to 6.54%. Now looking at the 30-year fixed though, at 7.1 on Friday, that is a decrease compared to 1 year ago. 1 year ago this time, we're at just under 7.4%. So a decrease about 27 basis points. Now here's the crazy thing though, and this is just absolutely wild, how volatile the market's been. Back in mid-September, I was making videos about how you can refinance your loan because that was the lowest rates we had in quite some time. And then we basically had this very short window in which people could refi and get a much lower rate. Then, as you guys all know, rates shot up greatly and they've been all over the place. But really ever since really the start of this year, we've been kind of seeing this downward trajectory. And as of April 3rd, just 1 week ago, we're at 6.6%. Now we're up to 7.1%, a giant increase up by 50 basis points in one single week. Absolutely insane. And this is one of the reasons why Redfin here says that this demand is unlikely to last if these rates maintain at high levels or continue increasing as well, right? Here's what we're also seeing as well. We're seeing new listings rising at a faster clip compared to pending home sales. So new supply in the market, people listing homes for sale, is increasing at a high rate compared to offers getting accepted. So new listings rising, but pending home sales lagging behind. And of course, the data supports that. on a national level, of course. So pending sales are falling despite more homes being listed for sale. New listings are up by 10.3% year over year, one of the biggest year over year increases in 1 year. According to Redfin's economic research lead, she stated the following: the only thing that's certain about rates and the housing market right now is extreme uncertainty. With the White House going back and forth on tariffs, sending markets and rates reeling, Americans are feeling uneasy about their money. Nobody knows what will happen next. That is a key point because this is how I view tariffs. Tariffs, I think that President Trump, I don't care if you're a Republican, Democrat, this is definitely a middle of the road channel, right? Not political. The tariffs that President Trump is enacting, I think is kind of creating chaos in order to gain leverage for tariffs. So he's trying to do this as a strategy to kind of get an upper hand regarding the trade imbalances we have between different countries. And because of that, we're seeing some countries like China, for example, retaliating and having the last I read was 124% increase in tariffs. In my opinion, this is kind of all short term. I don't think anyone is expecting that we're going to have tariffs from China over 100% for a long period of time. At some point in time, we're going to have these countries and us, the US, negotiate to come to an agreement. So in my opinion, this is all short-term fluctuations. And if you're looking to buy a house, I don't think you should have short-term fluctuations, right? Long-term time horizons. I always ask my home buyers when they reach out to me, usually from YouTube, if you want to buy a house, then when do you want to sell it? Do you have long-term time horizons? And I always recommend have long-term time horizons in which you do not plan to sell a house for at least 5 to 10 plus years. If you reach out to me and say, hey, Jason, I want to buy a house in Sacramento, but I may want to move or sell my house in a year or 2 or 3, then I tell them just rent, because short-term fluctuations, it's anyone's guess what's going to happen. But overall, historically speaking, real estate goes up in the long term. So have long-term time horizons, a stable job, and also an emergency fund set up as well. So anyways, that's my take regarding tariffs. I think this is kind of short-lived. We have a lot of bumpiness ahead because we have all this retaliation back and forth. But again, I don't think we're going to see this over the long term. So we'll have to see how this all plays out. Are we going to enter into a global recession, a recession in the United States? It all depends on where we end up and how long it takes us to get there. Anyways, that's my take on that. But please leave me a comment below because I have my own opinions, but I'd love to hear yours as well. So anyways, let's go on and looking at some leading indications. And we'll talk about home prices, inventory, and much, much more. So like I mentioned, application numbers from the MBA. These are people who are applying for loans to buy houses using a loan, of course. That rose by 9% from 1 week ago, but up by astonishing 24% from 1 year ago. Meanwhile, Google searches for home for sale is up by 10% from last month and from 12 months ago as well. All right, so here's the nitty and gritty, This data right here, their weekly data, I should say, goes back through 2015. So if you ever hear record high or record low, their weekly data only goes back about, 10 years. And this, by the way, covers the 4 weeks ended April 6th, and they cover 400 plus US metro areas. What Redfin does, they basically take a 4-week rolling average. So any effects regarding your housing market, regarding the stock market, tariffs, we probably won't see in the data for about 2 to 3 weeks because it is a 4-week rolling average. All right, so let's talk about home prices based on the US. Median sale price, it's at $386,500. This means out of all the houses that did close during this 4-week period, half sold above that amount and half sold below that amount. That's the median number. That rose by 2.5%. This is pretty low because overall this year, we have been paid at around 4 to 5% year over year. Now it's only at 2.5%. The smallest year over year increase since October of 2023. I'm guessing it's due to this right here, or partly due to this right here, a lack of housing affordability. Because looking at your average monthly housing payment, they take basically the weekly rate from Freddie Mac last week, which again, like I mentioned, were way higher than 6.6% according to the Morris News Daily. In any case, looking at that and asking prices at $427,000, that's where you get this number, 2,813, an all-time record high, keeping The growth rate in prices at relatively low levels, more or less in line with long-term averages. We tend to see home prices increase around 3 to about 5%, so right in line with the historical average. But kind of this deceleration we've been talking about for quite some time, because of course we've been seeing much higher year-over-year increases last year. Let's look at some actual data regarding this, looking at Redfin's data center. So to end the year last year, we were up by 6% year over year. Now we're only up by 3% year over year. So this deceleration in home price growth, much different compared to, let's look at 2022 this time. 2022 this time, we were up by a whopping 16%. Then in 23, we were down 2%. 24 up by 4, and now we're up by 3%. One thing to note as well is that even though we're seeing this kind of like slow down in home price growth, as you guys can see, home prices are still increasing ever since really February this year, which is entirely normal. We tend to see home sold prices increase around February through really the middle of summer, and then we tend to see this kind of leveling off or leveling down for the remainder of the year, especially during the holidays in November and December. Now let's have a look at how each of the 50 biggest cities fare, because of course, talking about national trends doesn't really tell us a full story because every real estate market is somewhat different. So looking at looking at these 50 biggest metros, 8 of them are now down. So about 42 of the 50 are up year over year. The biggest increases are Cleveland, Ohio, up by 12%, Milwaukee, Wisconsin, up by 11%, Newark, New Jersey, up by 8.8%, Nassau County, New York, up by 8.8%. I'm sure I'm mispronouncing that, my apologies. And New Brunswick, New Jersey, up by 6.9%. All these metros located in the Midwest or the Northeast, where they have a lack of inventory, right? In contrast, we have Indianapolis down by 4.4%, Jacksonville down by 3.3%, Montgomery County, Pennsylvania, which is actually located in the Northeast, down by 1.6%. Dallas down by 1.3%, and Tampa, Florida down by 1.1%. So these are the top 5 markets in which home prices have decreased the most. So therefore, the remaining 3 are down by about 1 to about 0.1%. All right, let's have a look at pending home sales and new listings and active listings, the measure between home buying demand and supply. So pending sales, of course, that's when you get your offer accepted. That becomes a pending home sale. There was 85,764 pending home sales. That's down by 1.1%, the smallest decrease since the start of 2025. I'll share a chart regarding that here in a little bit. New listings, there was 100,000 new listings. That's up by 10.3% year over year. Active listings is just under 985,000. That's up by 11.4%. So let's have a look at pending sales first. And you can see here, pending home sales is right there, down by 1.1%, basically more or less in line with the same number of pending home sales in 2023, that's the red line, and also in 24, which is the orange line. So the level of pending home sales has been kind of seeing this seasonal uptick, even though it's down a little bit compared to the past couple of years. But of course, we're way below back in 2022 this time. Back then, pending sales decreased by 5.4%, but they had 106,000 pending sales. Now it's only 85,000. So pending sales are down by 1%. Let's look at new listings, because new listings are up by 10.3%. So even though we have an increase of new supply in the market up by 10%, pending home sales still fell by 1% year over year. So even though we have more options, sales overall are going down. What's interesting about new listings as well, we're higher compared to last year, but also compared to 2023 as well, but still behind this time in 2022. If we were to look at the same chart, looking at pre-COVID, going back to 2016, 2017, Realtor.com has a graph regarding that. The level of new listings, even though it's higher compared to post-COVID levels, we're still lagging behind 2017 and 18 and 2019. So we're approaching more normal levels, but we're still less than pre-COVID though. Let's also take a look at housing inventory, or the amount of houses for sale right now. This is something that Redfin didn't know. I don't know why they didn't do this, but looking at right now, again, we have around 985,000 homes for sale on a national level, this is only looking at existing houses. So this excludes brand new home construction. So it's up by 11.4%. That in fact is actually the smallest year-over-year increase going all the way back until the 4 weeks ended March 10th of 2024. At that time, we're up by 10.5%. As you guys can see this year, to start the year, we're up by 17.5%. And we have been seeing this kind of deceleration in growth in inventory levels. And if you guys want to see, if you're watching videos, I don't watch videos about the housing market, but if you're seeing videos about how the housing market's crashing on a national level, I mean, really the data does not support that. We're not seeing supply doing this. That's what happened in 2022, right? 2022, we basically had all-time record lows of inventory. Then it shot up. I mean, absolutely skyrocketed. We're at what, 600,000 houses for sale in January, February. That increased to about, just less than 1 million in less than 6 months. But despite that growth rate, prices still rose, right? And this year, we are seeing this seasonal uptick, but it's not increasing at the same rate as last year. And that's why we're seeing this kind of deceleration in growth. So if you guys want to see prices decrease, if you guys want to see housing become more affordable, obviously we're not seeing that from mortgage rates because mortgage rates have been skyrocketing. But you really have to look at the balance between supply and demand. Of course, look at your market stats. If you're looking to buy in any town in the USA, take a look at inventory levels and see, is it going straight up? Is it going down? That's really going to dictate home prices. But on a national level, we're not seeing really this indication that prices are going to crater because inventory is only increasing at a slow clip, and we're only up by 11.5% year over year. At this time last year, we're up by 16%. And even though we saw a 16% increase of inventory, prices still rose, right? Let's talk a little bit more regarding that, every market's different. So pending home sales increased in roughly half the metros. So half of the 50 biggest cities reported gains in pendings, but half reported declines. So the biggest increases were Montgomery County, Pennsylvania, up by 12.2. Then we have Cincinnati, Pittsburgh, Warren, Michigan, and Baltimore, Maryland. In contrast, Miami, what's going on there? Anyone in Miami, let us know what's going on there. Down 17.4%. Then we have Fort Lauderdale, Florida, down by 16%. Vegas is down, Houston's down, and West Palm Beach, Florida, down by 8.7%. In regards to new supply in the market, this is a little bit different because there's only 2 metros that reported a decrease year over year. Those were San Antonio and Columbus, Ohio. If Jason Ferrier is watching today's video, he has a great YouTube channel. He lives in Ohio. So please provide your insights if you're watching today's video, or check out his YouTube channel as well. His YouTube channel is Housing Nerd. Anyways, the same name as me, but it's Jasson. So anyways, even though we have the country kind of split in half regarding contracts being signed, pending sales, it's a different story regarding new supply in the market. Again, it only decreased in 2 metros. So 48 of the 50 biggest cities reported gains. And the biggest increase is Phoenix, Arizona, up by nearly 26%. Same goes for Washington, D.C., up by 25.8%. Then we have Montgomery County, Pennsylvania, Pittsburgh, and Cleveland, Ohio, all up by more than 20%. Okay, let's also look at the month supply as well on a national level. So the month supply right now is at 4 months. We are seeing kind of a seasonal decrease in the month supply right now, but it is at least a 3-year high during the same time frame, obviously higher than 22 when we had 3% rates. Also, I want to look at this. Taking a look at how fast or how slow houses are selling. So days in the market's at 43 days right now. This is at least a 3-year high during the same time frame. We are seeing a seasonal decrease in days in the market because during spring home buying season, houses don't take as long to sell compared to the winter months, for example. Let's also have a look at the average sale price to final list price ratio. That's at 98.6%, which means that out of all the houses that did sell over the past 1 month, they sold for 1.4 percentage points less than the seller's final list price. So selling a little bit less than the asking price, more or less in line with the same time frame we saw last year, but a little bit below the same time frame in 2024. I mean, slightly below. At this time in 24, that ratio was at 99%, not 98.6%. And what a difference a few years makes now. At this time in 2022, homes on average were selling 2% over asking. Now they're selling for about 1% less than the seller's asking price. With that said, if you guys want a real estate agent referral, then please check out my website, which is realestateteamfinder.com. You also can apply for a loan there as well, if you're located in California or Texas only though. With that said, thank you everyone for watching today's video. Please like and subscribe. I appreciate you guys so much. Have an amazing day, and we'll see you in the next video.